Tuesday, August 2nd, 2022, Monaco 64, home of alternative economics and contrarian views. We're going to look at the petrodollar. I've been looking at the petrodollar for about 5 years. And I think the move away from the petrodollar has been a lot longer than it seems. It's not just happening now, and we're going to look at that and whether Taiwan, what's happening vis-a-vis Taiwan, could accelerate that move away from the petrodollar towards a BRIC currency. So that's what we're going to look at today. Before I start, I'd like to say I interviewed Tavi Costa, which many of you probably have heard of. I've interviewed him here before a few times on the channel. He's got a very good view of the macro picture. He's a very good analyst. His company, Crescat Capital, they're a fund manager. They focus a lot on the mining space, natural resources. So yeah, I interviewed him last night. I published a video interview last night, and if you haven't seen it, it's on my channel. I'm gonna put it up in the cards if you haven't seen it yet, and in the description of this video. We spoke about many things, but Tavi still sees the future in terms of tangibles, as he calls it, benefiting in relative terms from the move away from financial assets like stocks and bonds. And he's got a 5 to 10 year view really for this move. So he's still very bullish on gold and silver, bullish on commodities as well on a relative basis. And it's interesting that he sees as well gold becoming even more important as a reserve asset for fiat currencies, be it BRICS fiat currencies, and also for us. We're going to have to accept gold kicking and screaming. I know the Keynesians that run the UK, the US, and Western Europe don't like gold, but they'll be forced to move into that into that scenario, I would say. So yes, I've been talking about the petrodollar for quite a few years. I think I started back in 2016, and I would say as well that the petrodollar, the Chinese, for example, they started looking at a way out after the great financial crisis of '08, because it was a very disruptive crisis. I think the Chinese, there's records that they had a lot of mortgage-backed securities, and of course those had to be bailed out by the U.S. Treasury, by the Fed, and the Chinese didn't like that. And I think also the Russians, they've been looking to move their own way in terms of accumulating gold as far back as '06. So this has been gradual. I remember making videos, and I'll put them up in the cards. I have a petrodollar file that I'll put up in the card, a playlist. And I said in September 2017, China delivers knockout blow to petrodollar. So I was following all the little steps. New exchanges, gold exchange, Shanghai Gold Exchange. They're talking about the new Silk Road, or the One Belt as they call it now, and then they're talking about the BRICS as well. And I said the petrodollar is like a super tanker. So when you change tack or when you change course in a super tanker, it's not like changing course in a dinghy, in a Boston whaler, so to speak. It's a gradual move. It doesn't happen overnight. And I said that because a lot of people said, well, the dollar's still around. What are you talking about? But I said it's going to take years, and they have to prepare. They have to prepare the infrastructure, all the payment systems, which they have, not just the Chinese, but the Russians, so that other countries can be part of this. And I think it's all coming together now. And what happened in Ukraine and still happening there now is accelerating the global south, as they call it, their urge to join the BRICS, their urge to not be dependent on this petrodollar system. Petrodollar, of course, is just like a second act of Bretton Woods. It's what the U.S. had to really put the dollar on after Nixon closed the gold window, and they basically reneged on the Bretton Woods agreement. But the dollar has been able to keep going as the major reserve currency, because there are other reserve currencies like the euro, even the British pound, the Japanese yen, the Swiss franc. But I think the dollar's days as the major reserve currency, and by that I also mean pricing of things, of commodities, that's going to be done in different currencies, I think now, maybe the ruble. And I spoke about in all these videos through the years of all the processes that countries like China and Russia have been doing, like opening commodities exchanges, gold exchanges, and the fact also that the Russian Central Bank opened a branch office in Shanghai, and all the other processes. So I highly recommend you watch some of my videos in the Petrodollar playlist. I don't want to go through the whole thing right now, but be as it may, now with what's happening in Taiwan, or what could happen there, all the saber rattling, I think we could be at a juncture where what happened to Russia in terms of sanctions back in February vis-a-vis Ukraine could happen to China vis-a-vis Taiwan. Am I taking sides? No, I'm just observing. And it's not surprising to people like me and others in the alternative who know what the fight, this war, financial war, is all about. The fact that when they froze a few $100 billion of Russian reserves, we knew that countries like China took notice. And this could happen very easily again. So what's going on in Taiwan right now? Well, the latest report here from the FT says Chinese fighter jets fly close to Taiwan ahead of Nancy Pelosi's visit. Taipei and Washington brace for violent reaction after Beijing warns it will not sit by idly. So I think she's supposed to arrive there tonight, Tuesday night. I'm not sure if it's Taiwan time or London time, but later on today. And I saw a tweet about the fact that Nancy Pelosi, let's say if something happened to President Biden and then Kamala Harris had to become president, and then something happened to her, Nancy Pelosi would be the next one in line to be president. So she's got like a diplomatic status. She's kind of a head of state. And apparently there was a Shanghai, I think it was a Shanghai agreement or some agreement back in the early 70s to do with Taiwan, that foreign heads of state or people that are closely related to that post could not visit Taiwan. I think they needed permission from, let's say, the People's Republic of China government. Some of you need to do a little bit of history because this is not just China trying to invade a country. No, I think this is an ongoing civil war that hasn't been settled, and it goes back to the 40s, of course, the Chinese Civil War. And the island of Taiwan used to be called Formosa, and I think even the Japanese were there. I'm not sure when, maybe in the 20s and 30s. And so what happened during the Chinese Civil War in the late 40s is that the nationalists were fighting the communists. Chiang Kai-shek was the leader of the nationalists, and I think Mao was the leader of the communists. And the communists won, and Chiang Kai-shek fled to Formosa, as it was called then, I think. And it was only later on that it was called Taiwan. And I think it was run as a military dictatorship, that country, under the thumb of Chiang Kai-shek. And Chiang Kai-shek allied himself to the West, to the Americans. But I haven't read it, but I've seen that Anthony Sutton, who's spoken about how the Bolsheviks were financed by Wall Street. He's got books as well about how the communists in China were financed by Wall Street and the City of London. So, and they also helped Chiang Kai-shek. So these guys, the bankers, are always involved, and they finance both sides. In the end of the day, I think it's all got to do with the finances, and that will be the major, how can I say, consequence of this conflict will be a financial one, and it will be a move away from the dollar by a lot of these so-called global south or BRICS countries. And the BRICS seem to be gaining a number in terms of countries. Yesterday we saw that BRICS becomes appealing to more countries as Algeria signals interest in joining group, experts say. So it's not just Algeria, it looks like Iran, Argentina, even Saudi Arabia, Turkey and Egypt are looking to join the BRICS. So what that will mean, as I've said many times in the past, not just for the United States dollar, but for the pound, for the euro, and the other Western currencies, is that there will be less demand for these currencies, especially the dollar. And what that will mean as well is that the less demand there is, the less valuable they'll become. The less valuable they become, the less they will buy in terms of real things. And that fits in very well with Tavi Costa's theme of a move to tangibles. A lot of these countries are very wealthy in terms of natural resources. They're going to have to develop their own industries because the world is going to become a lot less globalized, and that will mean more demand for natural resources. So that all fits in very well. In the short term, of course, we're going to be told many different things about what's happening in these conflicts or disputes. But the bigger picture for me is all about the currency. And that's why I think even if we're in the UK, US, or the Western countries that are going to lose a lot of influence and financial power, we can still profit from it by being in the right place in terms of our financial holdings. And that's why I've been banging on about gold and silver, physical gold and silver, and lately in the last 2 years about hard assets as well. So yes, as I said, it's a slow process. I think when they were setting up Bretton Woods, there's talk that Churchill and FDR were talking about that even before Pearl Harbor back in 1941. So it took a few years to design that. Bretton Woods didn't just happen in 44 and that was it. So the same thing is going on now with whatever we're going to be calling this new global south or BRICS system. And yeah, Taiwan is just going to be another nail in the coffin of the, well, I think they call it the international world order. The West does. It's going to become more, yeah, there's going to be more different multipolar worlds. And whether the Americans will fight that? We'll have to see. And you have to wonder if it is really the Americans or the bankers. But the funny thing about China is that even though the United States seems to be very divided in terms of left and right, in terms of the Chinese questions, both sides seem to be in agreement, which is strange. So I'll stop at that now, and we'll look at something more clear, or maybe not even that clear. The markets this morning, it's 8:24 a.m. London time. So we got spot gold trading unchanged at 1772. It's been up as high as 1780 this morning, or overnight. Low is 1770. Silver is down 11 cents at 2023. The Dow futures is down 140. NASDAQ is down 100 points, and the S&P is down 26. FTSE is down 26 as well, or 1/3%, and the Euro Stoxx 50 is down about 26 points. To the currencies, we got sterling down 1/3%, 122.12. The euro is down 0.2, 102.50. The dollar continued to move lower against the yen. It's almost back to 130. It's made a huge move lower. I think this has got to do with the fact that the FX market sees the Fed becoming less hawkish. We're at 130.80, down 2/3%. The dollar is versus the yen. Dollar is up versus the Swiss franc, 1/4%, 95.20. And the dollar is down slightly versus the yuan at 677. Dollar is down about 1.2% versus the ruble. It's down to 60.50 this morning. To the other currencies, we got the Aussie dollar getting hit pretty hard, down 1.3%. I saw the RBA raised rates by 50 basis points, and I think people were looking for more. Maybe that's why the Aussie dollar is getting hit. It's at 69.30. The dollar is up 0.2 versus the loonie or Canadian dollar at 128.67. And the Kiwi dollar is down 0.75% at 62.85. To the general commodities, we've got WTI crude down 1/3 at 92.90. Brent is still trading around 100. It's down 0.5% at 99.20. High-grade copper is down 0.8% at 351.70. U.S. nat gas is down 1.2% at 8.18. Let's look at the Dutch nat gas futures. Well, that's continued to move higher. We're still above 200, around 206. That was up 2.7%. And we'll finish off with the bond market. Look at the U.S. Treasuries specifically. The 10-year yield continued to drop here. We're down to 255. It's down about 6 basis points. The 2 years at 285. It's down 5 basis points as well. So, yeah, it looks like the curve is still heavily inverted by 30 basis points right now. And does the rush into treasuries that we're seeing recently, and by rush I mean people buying treasuries, driving yields lower, does this mean that inflation is over? No, by no stretch of the imagination do I think inflation is over. It might slow down the rate of inflation, but it's got years or even a decade to go, the inflationary wave, I would say. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And I wish you all a great day. Take care. Bye.